everyone. My name is Paul Long. I'm Assistant Vice President of SBA Lending with Giza Credit Union. We are the #1 SBA credit union lender in Washington and Oregon. And I am here with Seth Rudin, Senior M&A Business Broker with IBA. Seth, tell us a little bit about IBA.
Thanks, Paul. So glad to be here with you and great to see you today. IBA stands for International Business Associates, and we are headquartered out of Bellevue, Washington, and we are a sell-side business brokerage. So in simple terms, we represent owners of family-owned businesses or privately held companies and help them market their business for sale so they can retire or exit their business. We start from the valuation of the business all the way through to the sale when they get paid at closing. Each of our brokers, like myself, are commercial real estate brokers, so we can sell the property and the business if needed or help you with the leases. We work across all industries. We were founded in 1975 out of Portland, Oregon, and the current president and CEO moved it to Redmond in 2000. And we've helped over 4,300 companies, reach a successful exit. So glad to be here today.
I did not know you guys started in Portland. That's an interesting fact that I didn't even know.
Very cool.
Well, hey, so Seth and I are just two passionate professionals who really enjoy working with business owners. And so what we're wanting to do in this video is share with you some of our thoughts and things we see, and most importantly, how to avoid some of the issues that we both run into all the time. So in this specific video, we're going to talk about what brokers and lenders want to see when you're preparing to sell a business. So the first thing I just kind of want to dive into this, is, are you working on your business or in your business? And I think, and Seth, tell me if I'm wrong, but one of those you get a lot more value on than the other. Is that right?
Definitely. We want to see people working on their business 80% of the time and 20% in their business. But naturally, we see the founder's dilemma, and which I think you're aware well of. That's where it's the reverse. 80 to 90% of the time, it's dependent upon the owner working day to day and trying to do the heavy lifting, when they'll be better off learning how to delegate and moving that work off to somebody else.
Are you buying a job or are you buying an investment? Like, that's how I would look at it when I see some of this stuff.
Exactly.
So let's talk about like profitability. We came, right before we were talking a little bit about COVID. COVID destroyed a lot of businesses, and financial statements don't look the best coming out of there. But Seth, in your eyes, how important is historic profitability?
There's no other way to prove the pudding that you have a great business than the past. So what can buyers and banks and other parties that have to give the approval to buy a business on their past performance? And it's sort of like baseball, right? It's what was your batting average? How many home runs did you hit? RBIs, all those things. Same thing for business. You got to have transparent, clear financials that demonstrate growth. Obviously, increasingly and consistently profitable companies are going to get a higher valuation, get higher chance of approvals from the banks and so forth.
Well, when I watch like Shark Tank, for example, and I'm sure most people are watching this video, watch Shark Tank, and they say, hey, my business is worth $20 million, and they start going through the sales, and you're like, where in the heck do you get that? People don't buy businesses based on future income, and banks don't lend to those on future income. We really do look at it as, what is it worth today? And that's a very important thing that that people need to understand when selling your business, that it's about the past, not the future.
Totally agree.
So, another thing I look for is, how's the team? Do you have long-term employees, or do you kind of have, transient employees? Seth, give me your opinion on that.
I think the team is really important, especially if they're buying an investment, right? And they're trying to avoid the founder's dilemma. How experienced, is the team? How well do they communicate? Do they have employment agreements to keep them in place? Or do they have incentives? Has there been a lot of turnover? If the owner wants to take a vacation in the summer and he can't rely on someone to run the business, it's going to be a lot harder to sell, and the value will go up if you're able to build in the right model and the right and staffing, team to help support you run this business.
And especially in any sort of business, making sure that you have if you have a key employee, that they stay with you, because that key employee is, well, it's in the name, key employee. I mean, without that person, you really got a problem. So, so one of the questions that I get asked before, and I think I posted this on LinkedIn before, is, well, I don't need a business broker, do I? Well, Jesus, you're not going to buy a house without a real estate agent. Why would you buy a business without a business M&A broker? So, how do you know, how do you know when they're ready for that?
Sure. From a seller's perspective, selling a business is really important. There's a lot of different factors in how to value the business, as well as approaching buyers and acquiring them. And then buyers typically don't want to speak candidly to the seller directly. So having an intermediary who can, navigate and negotiate and work through the pushbacks, the concerns to get to a yes is critical. I always say, yes, selling starts at no. And oftentimes when you get a no, you can still get a yes out of it. So knowing that, and then you have all the things that people don't think about. You have to have, 3 or 4 people approve it. You have the banker, you have the landlord, you have attorney, potentially the buyer has, a CFO or somebody else involved to help them screen the business. And you got to get each of them to say yes. And then you got to get past the legal documents to get to a final closure. And you can have all sorts of employment issues. You could have somebody make a claim against the business before closing that delays your sale.
Quickly.
Quickly.
That will delay.
Absolutely.
So I've always been in the understanding that, if you're an owner of a company, and, you should really look first of who your employees internally are. If you have anybody, that key employee maybe, that would be interested in buying your company. Are those people a good fit, Seth?
They can and they cannot be. Sometimes you have a long-standing resource who knows the business and they are well funded, good savings, whatever it might be, and they're able to buy the business for the price that you're happy with and be able to execute it, and they get along with the other employees. But they're more often than not, they don't have the funds, they don't have the people skills, but they have the knowledge, or they have the people skills, but they don't have the knowledge. So there's a wide reasons, they can't. There's also an ESOP, which is a methodology where the employees could buy it, but they have to have a trust, and they got to have collaboration and trust in the whole process for it to work. And it's very complicated. So it is an option. I would say it probably works 20% of the time.
I've always kind of wondered that. I have a situation right now where I'm working on a C-store where their long-term employee is buying in. And you're right, they know the business. They could easily run the business. How about their financial strength? I mean, you got a couple nickels you can run together, but that's about it. And that is the benefit of SBA programs is, low down payments in order to get in there. But, we want to make sure that you can survive after the sale as well. So.
Well said.
So tell me, Seth, about, contracts, financials, company filings. I mean, there's so much that goes into a business acquisition. What are some of those final things to look for?
We want to make sure you have everything in place that a buyer is going to have confidence. The bank's going to look for it too, right? So for the lease, if it's a lease building, what is the lease on it? If you're buying the real estate, obviously clean paperwork, environmental review, clear ownership transfer is going to happen. Your insurance policies are in place to protect the owner of the business and also for the bank themselves. All the financial records, the taxes and the P&L should closely relate outside of things like taxes and amortization. That could be a differential. People will check, are they consistent? Do they cross, reference each other so that they can know that what they're said that they're going to be buying is actually what it is that they're going to end up with, so that they didn't overpay with the business. One of those factors could be their top 10 customers. Are they making up 40% of the business, and one of them makes up 25 or 30, and I come in as the owner and they don't like me. I overpaid, 20, 25%, right? So we got to be wary of that as well. So keeping good documents, we talked about earlier, the employment agreements for key employees is also in a very nuanced business is very important to have as well.
That's awesome. Well, I definitely was reminded about some things through this, Seth, and I appreciate you taking the time and talking with everyone, because we have a lot of knowledge in both of our heads, and it's really important that people understand that it's not like buying a house. Buying a house is easy. If you think buying a house is hard, buy a business. That is difficult. So that's why you got to make sure you have the right people on your team. You got to make sure you have that banker. You have to make sure you have that business broker on your side to help you through it. It's not about fees and commissions. It's truly about helping. And Seth at IBA is a great resource for that. So Seth, thank you very much for your time today. And I look forward to talking to you on our next video.
Thank you, Paul. Appreciate it.